OpenAI Shows Us the Money by Zvi Moshowitz, September 24, 2025. They also show us the chips and the data centers. It is quite a large amount of money and chips and some very large data centers.
Image. A cartoon shows an ecstatic person in a vault as torrents of gold coins and bundles of cash spill out, with server racks and circuit board patterns in the background suggesting data centers and chips. Overhead banners read, $100 billion NVIDIA deal, and $400 billion Oracle spend.
NVIDIA invests up to $100 billion in OpenAI. NVIDIA to invest as much as $100 billion in cash into OpenAI to support new data centers, with $10 billion in the first stage, on the heels of investing $5 billion into Intel.
Ian King and Shirin Ghaffari, Bloomberg. According to Huang, the project will encompass as many as 5 million of NVIDIA's chips, a number that's equal to what the company will ship in total this year.
OpenAI. NVIDIA and OpenAI today announced a letter of intent for a landmark strategic partnership to deploy at least 10 gigawatts of NVIDIA systems for OpenAI's next-generation AI infrastructure to train and run its next generation of models on the path to deploying superintelligence. To support this deployment, including data center and power capacity, NVIDIA intends to invest up to $100 billion in OpenAI as the new NVIDIA systems are deployed. The first phase is targeted to come online in the second half of 2026 using NVIDIA's Vera Rubin platform.
New Street Research estimates that OpenAI will spend $35 on NVIDIA chips for every $10 that NVIDIA invests in OpenAI. Nice work if you can get it. NVIDIA was up about 4.5% on the announcement. This project alone is a full year's worth of NVIDIA chips, which should further put to bed any question of NVIDIA running out of Western customers for its chips, as discussed later in the post. Note that the details of this deal are not finalized, which means the deal isn't done. OpenAI's Stargate program announces new sites and big spending. OpenAI paired this with progressing its Stargate project with Oracle and SoftBank, expanding into 5 new AI data center sites and claiming they are on track to complete their $500 billion 10-gigawatt commitment by the end of 2025, as these announcements plus the original site in Abilene, Texas cover over $400 billion and 7 gigawatts over 3 years. The new sites are Shackelford County, Texas, Donna Ana County, New Mexico, a site in the Midwest to be announced soon, the existing Oracle site in Lordstown, Ohio, and next year a site in Milam County, Texas, developed in partnership with SB Energy. Berber Jin at WSJ described the full plan as a $1 trillion build-out of computing warehouses across the nation and beyond.
Sam Altman, CEO OpenAI. I don't think we've figured out yet the final form of what financing for compute looks like, but I assume, like in many other technological revolutions, figuring out the right answer to that will unlock a huge amount of value delivered to society.
To celebrate all this, Sam Altman wrote Abundant Intelligence. Very large training runs are coming. What about what this means for training runs? It means there is no physical cap that is likely to bind. It will be more about what makes economic sense since compute will be in high demand on all fronts.
Peter Wildford, 10 gigawatt AI training runs, probably with models 20x to 100x larger than GPT-5. We knew this was going to come, and we still don't have any updates on timeline. How many years the $100 billion is over is also unclear. The ultimate size of the investment is really contingent on this. I'd expect the 10 gigawatt OpenAI cluster becomes operational around 2027 to 2028. GPT-5 was disappointing to some, but it's on trend for its size, and true scaling hasn't happened yet. Get ready for the next 3 years, and we will truly see what some scaled AI models can do.
What about for other purposes? Ambitions are running high.
Haida. Sam Altman says the industry is bottlenecked by compute, and OpenAI can't meet demand. Over the next 1 to 2 years, scarcity could force painful trade-offs, cure cancer research versus free global education. No one wants to make that choice. The only answer: scale up.
Peter Wildford. NVIDIA is busy trying to sell chips to China while our American AI companies can't get enough compute at home. Enraged face emoji.
That seems like quite the timeline for either curing cancer or providing free global education. But yes, compute is going to be like any other limited resource. You're going to have to make trade-offs. Spending on healthcare and education cannot be unlimited, nor does it automatically win in a fight against other needs. Eyes are on the prize. That prize is superintelligence. Should we have plans and policies designed around the idea that superintelligence is coming? Well, we certainly shouldn't build our plans and policies around the idea that the AI companies do not expect superintelligence, or that they won't try to build it.
Rune. All the largest technology fortunes in the world are on record saying they're betting the entire bank on superintelligence, don't care about losses, etc. The only growth sector left in planetary capitalism. It is dizzying, running on red line overload.
If that statement does not terrify you, either you did not understand it, you did not think through its consequences, or you have become numb to such things.
Gavin Baker, quoted as a reminder from Bucko Capital Bloke, Mark Zuckerberg, Satya, and Sundar just told you in different ways we are not even thinking about ROI. And the reason they said that is because the people who actually control these companies, the founders, there's either supervoting stock or significant influence in the case of Microsoft, believe they're in a race to create a digital god. And if you create that first digital god, we could debate whether it's tens of trillions or hundreds of trillions of value, and we can debate whether or not that's ridiculous, but that is what they believe, and they believe that if they lose that race, losing the race is an existential threat to the company. So Larry Page has evidently said internally at Google many times, I am willing to go bankrupt rather than lose this race. So everybody is really focused on this ROI equation, but the people making the decisions are not, because they so strongly believe that scaling laws will continue, and there's a big debate over whether these emergent properties are just in context, learning, etc., but they believe scaling laws are going to continue. The models are going to get better and more capable, better at reasoning. And because they have that belief, they're going to spend until I think there is irrefutable evidence that scaling laws are slowing. And the only way you get irrefutable evidence why has progress slowed down since GPT-4 came out is there hasn't been a new generation of NVIDIA GPUs. It's what you need to enable that next real step function change in capability.
Mark Zuckerberg, last week. If we end up misspending a couple of $100 billion, I think that is going to be very unfortunate, obviously. But what I'd say is, I actually think the risk is higher on the other side. If you build too slowly, and then superintelligence is possible in 3 years, but you built it out, assuming it would be there in 5 years, then you're just out of position on what I think is going to be the most important technology that enables the most new products and innovation and value creation and history.
In case it is not obvious, no, they are not racing for market share of inference tokens. A central argument for going forward with AI that was often cited by OpenAI CEO Sam Altman used to be compute overhang. As in, if we didn't build AI now, then when we did build it, we would have more compute available and progress faster, which would be more dangerous, so better to make progress now. Simpler times. NVIDIA does not have too much money. Does NVIDIA have, as Dan Gallagher claims in the Wall Street Journal, too much money? As in so much money they don't know what to do with it, and it loses meaning. NVIDIA is set to generate $165 billion or so in annualized free cash flow by the end of 2028, according to consensus projections.
Image. A bar chart titled Pile Up shows NVIDIA's free cash flow by fiscal year, with negligible amounts from FY 2016 through early 2020s, then a steep rise to around $25 billion in FY 2024, and roughly $55 to $60 billion in FY 2025. Lighter-colored bars indicate projections climbing further to about $80 billion in fiscal year 2026, roughly $135 billion in fiscal year 2027, and around $165 to $170 billion in fiscal year 2028, on a scale capped at $200 billion.
In the worst case, you can always return value to shareholders. NVIDIA wisely only pays the minimum 1-cent dividend, so it can be included in various financial products, but has already repurchased $50 billion of its own stock over the past year and plans to buy another $60 billion more. The argument IB Gallagher is largely that NVIDIA cannot make a major acquisition without Chinese approval. I do not understand why they would care, given China is already actively telling companies not to buy NVIDIA's products. Seems like none of their damn business. But also, NVIDIA can do further strategic investments and projects instead that can easily eat up this level of free cash flow if they have no better use for it. Stock market investors would be happy to get more exposure to private companies like OpenAI. Thinking around NVIDIA on Wall Street has for a long time been rather silly, and my only regret is I did not buy in far sooner. For those who don't know, consider this my disclosure that I am overweight NVIDIA and have been for a while, quite profitably. For example, a real newspaper like the WSJ will post that the wow factor is wearing off because NVIDIA is now beating analyst revenue projections by smaller amounts.
Image. A horizontal bar chart titled Smaller Beats shows the difference between reported revenue and analyst projections by fiscal quarter, with Q2 2024 having the largest beat at roughly 22 and subsequent quarters generally smaller. By Q2 2026, the beat has fallen to a low single-digit value. The note says quarters are fiscal, years ending in January, and the source is FactSet.
If a company keeps beating your expectations, that's a failure of expectations, with that failure at least getting smaller over time. NVIDIA and the circular balance sheet trick. Many noticed that when NVIDIA invests in OpenAI, which uses the money to buy chips from NVIDIA, and you move $100 billion back and forth, this can inflate valuations without obviously creating real value. Such things have happened before.
Andrew Coate. $1 of cash on NVIDIA's balance sheet is worth $1, but $1 of revenue at approximately 50% net margins with a 50x P/E ratio is worth $25.
Paul Graham, as quoted by Danielle Fong. By 1998, Yahoo was the beneficiary of a de facto Ponzi scheme. Investors were excited about the Internet. One reason they were excited was Yahoo's revenue growth, so they invested in new Internet startups. The startups then used the money to buy ads on Yahoo to get traffic, which caused yet more revenue growth for Yahoo, and further convinced investors the Internet was worth investing in. When I realized this one day, sitting in my cubicle, I jumped up like Archimedes in his bathtub, except instead of Eureka, I was shouting, "Sell!"
You do have to watch out for the de facto Ponzi scheme, but this is not that. From a pure business perspective, it is a clear win-win agreement. You also do have to watch out for a naively multiplying profits into a fixed P/E ratio. But the stock market is smarter than that. The only losers are other AI labs, Microsoft, and humanity's chances of survival.
Peter Wildford. NVIDIA is doing revenue round-tripping at an unprecedented scale. NVIDIA servers purchased by companies using money from NVIDIA investment. Previously, there was CoreWeave, Crusoe, XAI, and Lambda Labs, but this is next level. I don't think any company has ever done this at such a scale. This seems great if we continue AI boom times, but could quickly unravel if AI is a bubble. This is another big loss for Microsoft. Microsoft could have been OpenAI's capital partner of choice as they got in early and had lock-in. But Microsoft wasn't willing to keep delivering and backed out. This is another nail in the coffin of the Microsoft-OpenAI relationship. Taking on NVIDIA as another huge capital partner provides some much-needed stability for OpenAI after being abandoned by Microsoft and their only other partner being SoftBank, which doesn't have the best track record. I guess good to know OpenAI is committing to NVIDIA chips for the long haul. Sounds like Microsoft isn't close to cracking their own chip development like Amazon or Google. That's good for NVIDIA at least. Ultimately, I am concerned that the U.S. economy is increasingly a leveraged bet on AGI happening. NVIDIA is 7% of the U.S. stock market, so their investments matter. AGI happening may mean the end of humanity, but at least the S&P 500 will remain strong. This probably explains why OpenAI doesn't talk much about export controls on NVIDIA products like Anthropic does, even though such controls would help OpenAI by undermining their Chinese competition.
NVIDIA is a bet on AI happening, but in a safe fashion, as they are doing it via reinvesting their profits rather than leverage. If AI valuations collapse, NVIDIA only goes down roughly proportionally, and they remain a great company. Partnership potentially preempts policy preferences. What about the implications of the deepening of the OpenAI-NVIDIA partnership for policy and willingness to speak out about existential risks? A key worry has long been that OpenAI depends on NVIDIA, so OpenAI may be reluctant to speak about AI risk lest they anger NVIDIA and endanger their chip allocations. OpenAI has not been a great political actor, but Sam Altman appreciates many of the dangers and issues that will be at stake. It is also fortunate that OpenAI's interests in many ways align with America's and with those of humanity, far more so than do the incentives of NVIDIA. NVIDIA wants to make and sell as many chips as possible to the widest variety of customers, whereas OpenAI has a strong interest in America beating China across the board and keeping things under control. This situation could get far worse. NVIDIA may even have made this part of the deal, with Altman agreeing to pursue or not pursue various political objectives, including around export controls. There is even the danger NVIDIA ends up with a board seat. It is likely not a coincidence that Anthropic has found a way to get its compute without NVIDIA. There is a matching bull case on two fronts. In terms of NVIDIA impacting OpenAI, it is plausible that NVIDIA already had maximal leverage over OpenAI via controlling chip allocations, especially if you add that it has the ear of the administration. At some point, things can't get any worse. And indeed, locking in these contracts could make things much better instead, via locking in large commitments that reduce NVIDIA's real leverage. Then there's the question of OpenAI impacting NVIDIA. NVIDIA has a market cap of approximately $4.3 trillion, but $100 billion is still approximately 2.3% of that, and the baseline scenario, since OpenAI is riskier and has more room to grow, is OpenAI equity grows in value faster than NVIDIA equity, and NVIDIA engages in stock buybacks. So even if no further investments are made, NVIDIA could quickly be 5% or more exposed to OpenAI, on top of its exposure to xAI and other Western AI companies, where it makes a variety of strategic investments. That starts to matter in the calculus for NVIDIA. Yes, they can do better short-term in their core chip business via selling to China, but that hurts their other investments, and America, but they clearly don't care about America. And long-term, the model of compute-intensive, top-quality closed models is better for NVIDIA anyway. Usually the incentives point the way you would think, but not always.
This has been an episode of the Don't Worry About the Vase podcast. If you enjoyed this podcast, please visit thezv.substack.com to support the author. If you enjoy having AI-narrated episodes, please note this is a listener-supported podcast. To receive new posts and support the cost of creation, consider becoming a subscriber at dwatvpodcast.substack.com. Thanks for listening.